Bitcoin is under $20,000 again. The chairman of the Federal Reserve made the absurd statement that he apparently didn't understand inflation until just now. The European Union cracks down enforcing stricter versions of the so-called travel rule, and the SEC rejects Grayscale Investment Trust's bid to become the first spot-traded Bitcoin ETF. Oh, and we're coming to you a day late. That and more on today's episode of the Bitcoin Bulletin Podcast.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. We are coming to you a day late. Today is Thursday, June 30th, 2022. I did, however, manage to actually make my DCA Wednesday stack last night. Long story short, I was basically spent all day driving 2-lane country roads in the deep south of the United States and often had just 1 bar of data if I was lucky. So I was able to squeeze off my stack, but I wasn't able to get the podcast recorded and uploaded. So I apologize for getting it to you late. Real quick, we look at the vital statistics. Right now, at the time of this recording, we are sitting at a block height of 743,085. Bitcoin is back under $20,000, currently at $19,056 per Bitcoin, or 5,254 sats per cuckbuck. Correspondingly, if you wanted to purchase Bitcoin with your shiny metal rocks, it's going to cost you 10.5 ounces of gold to buy 1 Bitcoin. And if you're hungry for pizza, if you're feeling like Laszlo, it will cost you, or it won't cost you, you will be able to purchase 1,142 Papa John's for just 1 Bitcoin. And the price of oil per barrel is up quite a bit since last Wednesday. Last Wednesday, Bitcoin was trading for $111 per barrel, and it's now $114.80 per barrel. But that you will still be able to score a whopping 165.99 barrels of oil per Bitcoin at a rate of 603,159 sats per barrel. Bitcoin's market cap is down just a little bit from last week to $363.3 billion. Obviously, just a third of that 1 trillion market cap that we hit when Bitcoin set that all-time high of around $69,000 last fall. The mempool is wide open at the moment. There are less than one block's worth of transactions pending. Of course, we just had a block. That being said, the calculator is, the fee estimator is estimating that it'll take 14 sats per byte to guarantee that your transaction will be in the next block, but with less than a block's worth of transactions currently pending, at the moment at least, 1 sat per byte transactions will still clear immediately, and it's estimating they'll clear within 24 hours. But right now, obviously, it looks like any block out there will be included, any transaction out there will be included in the next block. The metric that you know I like to follow, the 24-hour transaction rate, it's much improved from last week. Last week, we dipped below that magic number of 3 transactions per second. We were at 2.94. Currently, we're humming along at 3.18 transactions per second on chain, and that's healthy. That's indicative of healthy on-chain activity. Obviously, it does not include Lightning transactions or trading back and forth in an exchange's liquidity pool. Obviously, if you're purchasing and holding at an exchange, that Bitcoin it's not actually yours. You're just trading IOUs, and so that doesn't reflect in on-chain volume. We are approximately 6 days away from the next difficulty adjustment. Of course, the last difficulty adjustment was a downward increase of 2.4%. The Bitcoin's mining difficulty is adjusted every 2016 blocks, or theoretically about every 2 weeks. And that, of course, is to maintain the target goal of 10-minute per block times. And we're 819 blocks until the next difficulty adjustment. Last week it was all over the place because we were so far away from a difficulty adjustment. It was pretty much impossible to guess what that was going to be. Now that we're a lot closer, it's still anywhere from a minus 0.65% decrease in difficulty to an increase of 1.5%. So I guess that remains to be seen. We'll find out sometime around July 6th. But currently, blocks are averaging 9 minutes and 51 seconds. Obviously, that's a little faster than Bitcoin is programmed. If it doesn't, if it stays at around 9 minutes and 51 seconds, we'll get a difficulty increase. But last week, we were averaging 6 minutes and 59 seconds. So mining times have stretched out closer to that 10-minute goal in the last 7 days. All right, as I mentioned, I was on the road yesterday, stuck in the deep south of the United States, and the weather was absolutely horrible, just pouring rain everywhere I went. We did, however, manage to pull off our purchase, and at that time, Bitcoin was at a block height of 742,939, and Bitcoin was worth $20,050 or 4,988 sats per dollar. And obviously it has gone down a tiny bit since then. However, we're pretty much consistent with where we were a week ago. So a week ago on DCA Wednesday, we purchased Bitcoin for $19,949. So even though it went up and then quote unquote crashed again, according to a lot of the media sources, we're pretty much exactly where we were 1 week ago. And Bitcoin has been languishing in the plus or minus $20,000 range for at least 3 weeks now. Before we get any further, I want to remind you that we are available on your favorite podcasting 2.0 apps, such as the Fountain app or the Breeze wallet. And along those lines, we have had several people streaming us sats, and we also had one of you send us a boost. And when you send a boost, you can do so as a message. And we have, the message is, it's signed by just the generic, what looks like a Breeze wallet address. So they didn't leave a name. So I'm not sure if they don't want me to, I'm not going to dox somebody's Breeze wallet address. But we did get a boost, and thank you very much for that user. I won't dox you, but thank you. And the message is as follows: incredible bulletin. Let's go BTC. There are market cycles, but the fundamentals are on fire like as forever. And that is certainly true. You know, the price is way down, quote unquote, if you bought at the high of 69,000, or even if you bought, even for us, I mean, I think our cost basis right now is around 42,000 per coin for this stack. But there's a lot positive going on for Bitcoin. The news might seem like it's doom and gloom, but that's of course because the media thrives on fear porn. Good news never gets played, and of course governments out there, they say that Bitcoin has already won, or the governments aren't necessarily going to try and attack Bitcoin. And I've said repeatedly they are attacking Bitcoin, and how they're doing it is they're just trying to make it inconvenient. They know they can't flat out ban it, but if they just make it a pain in the tuchus, then hopefully they can keep it either captured or keep their thumb on it as long as possible. The government's into kicking the can down the road when it comes to a lot of things, like the national debt, like what we saw with inflation, etc. So even if they did have grandiose dreams of squashing Bitcoin one day, the government usually does things in slow, protracted, bureaucratic measures anyway. Like, for example, the European Union is bragging about finally coming to agreement on their enforcement of the travel rule when it comes to Bitcoin. And basically in Europe, they're going to make it a pain in the butt for you to send Bitcoin back and forth, that if you send it, they're going to require you have the personal information and the entire transaction history of the Bitcoin in perpetuity, and making it as difficult as possible for exchanges so that they will probably ban you from withdrawing to wallets that are not identified, that they don't know who holds that wallet. And that might seem like a bad thing, but in the long run, that's actually a good thing. I mean, if you're encouraging people to get we've been encouraging people to get their Bitcoin off exchanges. Everyone's been encouraging people to get their Bitcoin off exchanges. The whole not your keys, not your coins thing. But the European Union they're basically telling you, get your coins off exchanges. Otherwise, you might not be able to in the future. And they can go ahead and make themselves irrelevant. And we will, as they say, life finds a way, Bitcoin finds a way. It was never really intended to be a commodity that was just traded back and forth on exchanges. Bitcoin's supposed to be a peer-to-peer currency. Obviously, that was Satoshi's entire vision was quote unquote a P2P digital currency. So the European Union, if they're gonna force you to use Bitcoin as its intended purpose, that is not necessarily a bad thing. Again, a lot of the whole price action, in my opinion, is it appears that we're just following those 4-year cycles again. I have some theories about why we had a double top and why we didn't hit Plan B's 100K or greater price target, and who knows whether that's right or not. My personal belief, as I've mentioned before, is that we got an early start, a little bit of an early kickoff when Elon Musk came out, made his big Bitcoin announcement that Tesla and SpaceX and he were holding Bitcoin. So that maybe was a little premature. And then China came out with their mining crackdown FUD, and there was just so much FUD that kind of, and then Elon backed down when he faced the onslaught from all this, the ESG warriors saying that he was, Bitcoin is dirty, Bitcoin pollutes, and therefore, he backed off on Tesla accepting Bitcoin for payment. So that fizzled for a bit, and then about the time we should have been nearing a new all-time high, we climbed up again, and that's when we hit that $69,000 high. But every market cycle, while they say that history doesn't repeat, it rhymes, is a little different. And so I think if you would have taken that graph and started the chart a little bit later than the Elon pump, and then we would maybe have started coming down about the time we did start coming down from the 69,000. If you connect the two peaks, we might have shot a little higher, and that feasibly could have been over $100,000 easily. Even if we had hit 150,000, 200,000 and continued to follow the 4-year cycle theory, we were in for an 80% crash, which would have knocked us well under that $69,000 price tag right now. The only thing that is different is that Bitcoin has never gone below its all-time high, its previous all-time high before, which we have. But again, that's kind of almost a technicality at this point. However, the 2-year, the 4-year cycles, the downslide, the bear market is also not usually over this fast. So normally, like if you remember 2017, we went all the way up to almost 20,000 in December, and then Bitcoin crashed. It was down to the teens, 16, 15, 12, but stayed around 10,000. Then it went down under 10,000 for a while, and then it went above 10,000 and into like 12 or 13 again, if I remember properly, and then back down to around 8, and then it kind of stayed in the 6 to 8 range for like a year-ish, and then of course it had that sudden capitulation down to 3,000, and then the next halving cycle started. So we could be in for a long bear market. Who knows? The way I look at it is good. As I've mentioned before, everybody has that personal Bitcoin stash goal, and then that goal tends to be a moving target and change, and it certainly has for me. I had worries that when Bitcoin was approaching 69,000 that I was never going to hit my goal, and now I think I actually will be able to hit my goal, and that's exciting. So, and if Bitcoin drops, if Bitcoin has a huge capitulation event and we see like $10,000 per Bitcoin again, anybody need a kidney? Because I'm going to do whatever it takes to buy a whole coin in one fell swoop. If that would just be amazing, because not everybody is an early adopter with a stash of dozens of coins or hundreds of coins or thousands of coins. A lot of people would, I was just reading on Reddit last night, somebody had posted one of those posts that are usually frowned upon, the whole don't post how much Bitcoin you have, because while you might not think it's a lot today, 10 years from now, that might be enough to make you a target. I don't have a personal opinion on that one way or another because Reddit is supposed to be kind of anonymous anyway. But the post was that they had finally achieved their goal, which was 0.1 Bitcoin. And 0.1 Bitcoin at $69,000 a Bitcoin would be $6,900, which is a lot of money. 0.1 Bitcoin, if Bitcoin goes down to 10,000, would only be $1,000. And that's still a lot of money, but not way unobtainable. Like, $6,000 is, that's for some people, that's more than their car costs. For others, 6,900 isn't a big deal, or 69,000 wasn't even a big deal. Along those lines, Michael Saylor bought the dip, announcing that they just bought another $10 million worth of Bitcoin. So obviously, part of the FUD was for the longest time that, well, first, Celsius was going to get shaken out, and we saw all that sort of stuff come true. But the big FUD was what's going to happen to Bitcoin when MicroStrategy gets liquidated or Michael Saylor sells, and everybody realizes that he's lost his faith that when he said he was going to hold forever, Laura, forever, that maybe that wasn't really true. And I think he's just shown us that his conviction runs a little stronger than a lot of the naysayers might think, because he's adding to his stack. Along the news, besides just price news today, the Federal Reserve came out with just an absolutely dumbfounding statement when they were meeting in Europe. Christine Lagarde said some interesting things too, but Jerome Powell said, quote, "I think we now understand better how little we understand about inflation." Basically saying that they didn't realize that expanding the money supply would have an effect on inflation, that they thought there would be disinflationary factors that would go on forever, and that, oops, they were wrong. And how could they ever have known that printing all that money would lead to runaway inflation? Of course, how they could have known was by looking at Bitcoin Twitter or Reddit or online, because all of the Bitcoin maxis out there, and even the non-maxis, the money printer go burr memes have been around for years now, right? At least 2 years. So everyone was saying, hey, supply and demand, idiot. If you print more money, if you double the money supply, if there's twice as many dollars and the same amount of goods, those goods are going to be worth less, or the goods are going to cost more. The dollars are going to be worth less. Supply and demand is pretty basic economics. Even if you haven't taken economics in college or have an economics degree or even had a specific economics course in even primary school, everybody's heard the term supply and demand. And supply and demand is two factors, supply and demand. Of course, supply being the goods that are getting more expensive, and demand being represented by how many dollars are chasing those goods. If there's more dollars chasing those goods, the dollar's going to buy fewer goods. And of course, I'm preaching to the choir here, but apparently the government would like you to believe that they didn't realize that. Of course, I've said all along, I think they realize that. This is absolutely on purpose. They need inflation because in order to keep spending money that they don't have, they need to inflate it away. Last week, somebody had posted on one of the Bitcoin forums somewhere, I don't remember now, but it was an old clipping of, I don't remember what it was, but it was obviously Florida. There were homes with palm trees and stuff in the background, very tropical looking. And it was like $7,450 for a 2-bedroom, 1-bathroom house with a screened porch and a carport, and your house payment was going to be a whopping $47.92 a month, or a 3-bedroom house for $7,900 a month. And houses haven't gotten more expensive. Your money has just gotten more worthless. And I think if you are a Bitcoiner, you already understand that. If you're just learning about Bitcoin, that's one of the things that makes Bitcoin so amazing, is that it is not an inflationary currency. There will never be more than 21 million Bitcoin, the majority of which have already been mined. So there's very little new Bitcoin in the grand scheme of things. Every 4 years, the amount of Bitcoin that is rewarded to miners for finding a new block is cut in half, hence the 4-year halving cycle. The next halving will be in 2024, and we'll start the cycle all over again when the Bitcoin reward will be just a little over 3 Bitcoin per block found as opposed to the 6.25 or whatever that it is currently. So I guess along in the positive, cheery government news and the government's making Bitcoin more difficult to purchase, the SEC finally rejected Grayscale Investment Trust's bid to turn their trust into a spot Bitcoin ETF, what would be the first spot Bitcoin ETF approved in the United States. Of course, there are Bitcoin futures ETFs approved in the United States, betting for and against Bitcoin on paper. There are spot Bitcoin ETFs in the rest of the world. There are not no spot ETFs in existence. A lot of times people in the United States tend to live in a bubble. And that's a legitimate mindset in many ways, because still the vast majority of Bitcoin use is occurring in the United States, although I think that's being rapidly eclipsed in places like Africa and hopefully in places like Venezuela. But people tend to, especially in the United States, I know this irritates the hell out of Europeans, but people seem to, well, even Europeans would like to see the U.S. get around to approving an ETF because they think it will rally the price of Bitcoin, and maybe it will. Currently, Grayscale has filed a petition for review with the United States Court of Appeals for the District of Columbia, saying, quote, "The SEC is acting arbitrarily and capriciously in violation of the Administrative Procedures and Securities Exchange Act of 1934, adding that if regulators are comfortable with ETFs that hold derivatives of a given asset, they should logically be comfortable with ETFs that hold the same asset." Of course, you're giving government too much credit, assuming that they would do anything consistently, that, if they make one decision one day, that they would logically make the same decision the next day. If you have dealt with any regulatory bodies of the federal government, or probably even your state or local government, you know that that is anything but true. And of course, the SEC also rejected the Bitwise ETF application. So as it stands in the United States, there will probably not be any spot Bitcoin ETFs in the near future. And if you're counting on an ETF to pump the price of Bitcoin, now it's probably not the best time anyway, because if we follow that 4-year halving cycle, if we just got a little artificial bump right now, it would go right back down. So ideally, if you're hoping that the SEC is going to pump the price of Bitcoin, the best time to see that would be after the 2024 halving, because that's when Bitcoin's going to be primed to rocket in value again, if history repeats or rhymes. So I personally don't care. I don't think that the more you let Wall Street bankers and brokers and hedge fund managers and day traders, control the flow of Bitcoin, the more Bitcoin they soak up, the more Bitcoin that they take off the market for, the average retail investor, the worse, right? It's supposed to be a peer-to-peer currency, which means the little guy is supposed to have his chance to get Bitcoin. And the more difficult the government makes it for the banks to mop up all that Bitcoin, the better it's going to be in the long run. So stack that coin while you have the chance, and consider this price, this depressed price, a gift from the gods. And the news just keeps getting worse, right? I don't care, and I'll explain again later why I think this is actually good for Bitcoin. But according to a report from NBC News, the state of New York has denied Green Ridge's quote-unquote controversial Bitcoin mining facility at Seneca Lake in the Finger Lakes region. Obviously, they've been operating a natural gas plant powering their Bitcoin mine facility in New York. New York has been cracking down. They banned any new Bitcoin mining permits as it was, and now they haven't revoked the permit for the existing mine, but they have not renewed the permit, which is functionally the same thing. Green Ridge, of course, says they will continue to operate the plant while they challenge or appeal this decision, but Bitcoin doesn't need the state of New York. There are lots of different states. There's 50 of them, and all of them are different in some ways. I think you would not compare the rules. If you tried to compare the rules on anything in like Texas or Florida versus California or New York, you can see they are just radically different when it comes to just about everything. And that's the great thing about the United States. We have 50 different experiments. And if you want to live in a state that controls your money and controls the things you can do, we saw it in the the pandemic. Some states wanted you to stay in your house and wear your mask and get triple jabbed or whatever the case would be. At other states like Florida opened right up, and life here in sunny Florida was basically, we had effects, and the economy was repressed by the cruise industry and all that, taking a pause. But other than that, walking around day-to-day life in the states, in some states, it was completely normal. And then when you would travel out of that state, it felt like you were traveling into a science fiction novel. It was just mind-boggling. I was fortunate to spend most of the pandemic not in the states that were hyper restrictive. I did, however, go to a few places that were ultra restrictive for a week or two at a time. It was really weird not being allowed into a restaurant because I didn't have a card with me. But like I said, there are 50 different states. They can have their different rules. Bitcoin doesn't care. If you want to outlaw Bitcoin in New York, all you're doing is hurting New Yorkers. You're not hurting Bitcoin. The miners will just pick up and move. And you could see that with, I believe it's Marathon Mining that is completely relocating out of Montana because they're having issues with their power supplier up there. I'm not, I think it's maintenance related or I don't remember. But the fact of the matter is they're completely picking up and moving to Texas. And maybe Greenridge will do the same thing. And that will not hurt Bitcoin at all. That will just hurt New York. All right. I said I was going to make this short and sweet, and I'm already not short. Hopefully, I am staying sweet. The reason we're here is because it was DCA Wednesday. It's now Thursday. However, I did make my DCA purchase, and if you are just joining us and you're asking what is DCA, DCA is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 49th stack. We started stacking $20 worth of Bitcoin every Wednesday back on July 28th, not quite a year now. So far, we've stacked 48 times, just $20 at a whack, but that $20 is our equal portion. Wednesday is our regular intervals. As they say, do your own research, you do you. Some people dollar cost average every paycheck, whether that's weekly or bi-weekly. It seems every 2 weeks seems to be kind of the standard in the United States for paydays. Some people are stacking every day. There are services that'll let you stack hourly. For us, I chose weekly. That seemed pretty reasonable. I think even in the less than a year that we've been stacking, you've seen that purchasing on a fixed date and a fixed amount has smoothed it out for us quite a bit, because while Bitcoin has fluctuated quite a bit, between say 17,000 and 22,000 over the last month, all of our purchases have been pretty much right at about 20,000. 20,000. So DCA has certainly smoothed that out for us. Of course, we started in July during the middle of the halving bull run. So we are underwater on our average cost basis. But the great thing about Bitcoin being cheap and the great thing about DCA is we bought on the way up, but we're also buying on the way down. And every purchase now we're stacking a little bit more in the number of sats than we were previously. I think we've purchased 97,000, almost 98,000 sats last week, whereas when Bitcoin hit its all-time high, we were only getting $29,000 or 29,000 sats for that $20. So that's the beauty about dollar cost averaging. They say that time in the markets beats timing the markets. Of course, Bitcoin tends to run in 4-year cycles, so you should have a long time horizon with Bitcoin, but you should also have a long time horizon with DCA. The whole thing with dollar cost averaging is it is a long-term investment strategy. It's kind of playing the averages over time. For example, if you flip a coin, you have a 50-50 chance of it being heads or tails. But that doesn't mean if you flip a coin 100 times, you're going to get 50 heads and 50 tails. You could get 75 heads and 25 tails. It's random chance, but the more times you flip that coin, eventually it's going to work out to that average of 50-50. There was actually a pretty good movie. I think it's called Jerry and Marge Go Large, and it's got Bryan Cranston, Walter White Heisenberg from Breaking Bad in it, and it's a feel-good movie. It's not what they call a chick flick, but it's a cute feel-good movie. And the idea was it's based on a true story where he had discovered a flaw in a lottery game where the odds would be in your favor. If you invested a certain amount of money, you were guaranteed to more than break even. And so he and his little town all formed a lottery pool, and they bought something like, starting in the $10,000 or $14,000 of the lottery tickets. And after a certain amount of money, they would make more money every time until that lottery game finally came to an end. It's an interesting movie, but it illustrates the law of averages, and the same thing applies with dollar cost averaging. If Bitcoin continues to go up and to the right in the long term, which it always has, and which if you're a Bitcoin believer, you believe it will, I believe it will. Nothing's guaranteed in life, but if Bitcoin performs the exact same way it always has for its entire history, it runs in cycles, but continues. If you zoom out, it will be worth more in 4 years than it is today, even more in 10 years than it was today. So dollar cost averaging will take advantage of that and let you build a stack over time that will hopefully be worth more than you invested. And for that stack, as I said, I did this stack yesterday while I was on the road. We purchased at what was then $20,038.54 per coin. That scored us an additional 97,562 sats, and that brought our stack up to 2,360,837 sats. So we've stacked 2.3 million sats, more than 2.3 million sats in less than a year at just $20 a time. And that's pretty amazing. A lot of people say, am I too late, or I only have $100 to invest? Is it worth even investing such a little amount? And, if you thought, well, I've only got $100, it's only going to buy me, X number sats, that doesn't seem like a lot. But if you said over a year, at just $20 a whack every Wednesday, you would have 2.3 million sats. All of a sudden that adds up. If Bitcoin were to ever hit the moon one day, that magic $1 million a coin mark that people like to say, it might hit one day, maybe sooner than later, depending on, what your personal beliefs are. That 2.3 million sats would be worth $23,000, $23,608 to be exact. And that is a heck of a return for just $20 at a whack. So, Bitcoin, I'm a firm believer, is either it's an all or nothing proposition as far as I'm concerned. Either it's going to the moon or something unforeseen is going to come along and destroy it. I think every day that Bitcoin is alive, the chances of it going to zero are smaller. I am not surprised at all to see it in the $20,000 range, because Bitcoin has always had its 80% drawdowns after a bull run. And the fact that we didn't hit 100,000 meant that we were going to go below 20. That's just logical. 80% drawdown of 100,000 would be 20, and we had an 80% drawdown. We're going to have an 80%-ish drawdown from 69,000, so that's obviously meant we were going to go under 20,000. That is not shocking. If you have been following Bitcoin, this is expected. It's just like that old YouTube video, the meme from probably it's more than 4 years ago. It was an old video in 2027, but this one time Bitcoin went from $1 to $2 and then it crashed. And then another time it went from like $100 to $2,000 and then it crashed. So the moral of the story is, don't buy Bitcoin because it's going to crash. And obviously he's being tongue in cheek. It's funny, but that's just the way Bitcoin rolls. So this is your opportunity. Hopefully you're stacking those sats. Where was I? So we've built our stack to 2.3 million sats, and we have lowered our average cost basis to $41,510.70 a coin. That is down another $905 from last week. So the great thing about Bitcoin being down is 3 weeks in a row now, we've lowered our average purchase price by almost $1,000. And so that is awesome. And I am looking forward to getting that average cost basis down under $40,000. Unless Bitcoin goes on a tear, by the end of this summer, we'll be in the mid 30s for our average cost basis. So when Bitcoin breaks that $69,000 all-time high and sets that new all-time high, you're going to be wishing you had purchased at $40,000, let alone at $18,000 or $20,000. All right, a little bit of business real quick. Obviously, we do not have any sponsors for our show, but there is a commercial that sometimes runs at the beginning, and that is because we're using Anchor FM by Spotify to record and host our podcast. Of course, it's available on any podcast app that you choose, including the Podcasting 2.0 apps, such as the Fountain app and the Breeze Wallet. And if you don't know what Podcasting 2.0 is, it is really cool. It's the value for value model. It lets you stream sats to your favorite podcast or not. You can still listen for free. But if you want to support your favorite apps, much like you might support your favorite street musician by putting a couple dollars in the hat as you listen, you can do so. You can stream a fixed amount per minute, say a sat per minute, to your favorite podcast, or you can hit the boost and just send a one-time tip, and that is how those messages like the one I read get sent, because it is over the Lightning Network. A boost is actually a message, so you can send a message with a tip, and if it is not something obscene or completely off the wall, I intend to read them on our podcast like I did the last one. So again, I'm not Marty Bent. I'm not going to read a hexadecimal code out, or I'm not going to say something obscene 10,000 times in a row like he has done for their shout outs on the Tales from the Crypt or Rabbit Hole Recap podcast. But be reasonable, and if you do support us with the boost, I will read your message on the following podcast. And as much as you would think that people aren't willing to part with their precious Satoshis, people have been supporting us, and that's really cool. It's neat to open the Fountain app and to see a few more sats here, meaning someone listened to my show and someone had appreciated it. And so that's really cool. Thank you very much. And thank you. I'm not going to dox your name, but thank you to the listener who sent us that boost message that I read at the beginning of this episode. If you like listening to the show and you want to support us, there are a number of ways you can do so. First and foremost, as I mentioned, we are available at we record our podcast, and we are hosted by the Anchor.fm by Spotify, and we're using the Anchor.fm app to record right now. And there is a way you can support us directly through Anchor.fm, and that link is included in the show notes. Whether you're listening on your favorite podcast, you just scroll down with the show notes, and there's links in the bottom. One is that support link. It's also available on the video version on YouTube, which we usually post a little bit later, so you get audio first. Of course, please follow us on Twitter. We are at BTC Bulletin Pod on Twitter. And if you feel so inclined, you can tip us via Twitter. Again, listening on the Fountain app or your favorite Podcasting 2.0 app, you can support us that way. You can also support us by some referral links that we have in the show notes. As you know, I've been doing all of our stacks using the Cash App, and there's a Cash App referral link in the show notes. If you don't have Cash App and you want to use Cash App, clicking on that link and signing up, they'll give you $5 free, and we'll get $5 as well. There's also a referral link for Strike. If Strike is available where you're at, I intend to get into Strike on one of these episodes, because there's some neat features of Strike that are unique to Strike. Like if you want to pay for something in Bitcoin, if you want to encourage Bitcoin use by asking your local restaurant or even just your waiter, hey, can I tip you in Bitcoin? And you don't want to use your stack, you can actually use Strike to send US dollars from whatever you have linked to your Strike account, like let's say your debit card, and you want to tip somebody $10, tip your waiter $10, you can put that $10 on Strike and then send it to a Lightning address or a Bitcoin address, and the receiver will get Bitcoin. And so you can spend Bitcoin, give somebody Bitcoin, promote Bitcoin without eating into your stack. And more importantly, you didn't actually touch Bitcoin, so there's no capital gains event for you, at least not in the United States. All you did was spend money. So that's really cool. And we do have a Strike referral link in the show notes as well. That you actually get a little bit more. You get $10 if you click that link and sign up and follow their criteria, and I don't remember what it is off the top of my head, but basically it's sign up and use Strike. And you'll get $10 free for doing so, and we'll get $10 as well. As you know, if you've been listening, I've also written a couple of books. They're all available on Amazon.com and BarnesandNoble.com, but the one that's most relevant to this show is Understanding Bitcoin for Noobs. I wrote that back in 2017. I'm getting ready to do an update of that book, add a couple of things nothing's really changed about Bitcoin. There's been a few improvements here and there, but it was 4 years ago. So, but it is a short book. It is not a very technical book at all. It's, as the title implies, it's Understanding Bitcoin for Noobs. And if you are new to Bitcoin and want to breeze through the basics, or if you want to help orange pill a friend, it's a pretty good primer, in my humble opinion, explaining what is Bitcoin, what are wallets, what is the mining process in non-technical terms for noobs. Of course, if you purchase any of my books, that will help me as well, and I would appreciate that. So thank you for those of you who have or will in the future. Also, if you do want to tip us Bitcoin on chain, there is a Base32 address in the show notes. If you're watching the video version of this podcast, that's the QR code in the bottom left corner if you wanted to tip us Bitcoin directly. And if you've been enjoying listening to this podcast, again, you can send us a boost on the Fountain app and let us know what you think, and we'll try and read that on the next episode. But you can also contact us, again, through Twitter. We're at BTC Bulletin Pod. And email, we are bitcoinbulletin@protonmail.com. Again, don't forget to join us this Wednesday and every Wednesday, except for today, which happens to be Thursday. And again, I'm sorry for that. But don't forget to join us at least for our DCA Wednesday episodes. Until then, keep stacking those sats, you sexy sat stackers.